All right, if you're a freelancer, a rideshare driver, or maybe you're selling stuff online, you know that the freedom that comes with the gig economy is absolutely amazing. That tax bill at the end of the year, though, yeah, not so much. Today, we're going to flip that script. We are turning that dread into actual dollars in your pocket. So let's dive in. And listen, we are not talking about pocket change here. We're talking about a very real, very tangible goal of saving $2,000 or, probably a lot more on your 2025 taxes. This isn't just some random number I pulled out of a hat. It's a target. And this explainer, this is your roadmap to hitting it. I mean, this quote just nails it, doesn't it? It's like 1 minute you're celebrating landing that huge new client, and the next you're just staring at an IRS form going, wait, where did it all go wrong? It captures that feeling perfectly. But the good news is, you can write a much, much happier ending to your own tax story. And if you feel this way, it's because you are absolutely not alone. You're part of this massive economic shift. So the tax challenges you're facing, they aren't unique to you. They're pretty much the new normal for millions and millions of people. The scale of this is kind of wild when you see it laid out. We're looking at 38% of the entire U.S. workforce. That's roughly 64 million people doing some kind of freelance or gig work. This isn't some tiny niche anymore. It's a full-blown revolution in the way we all work. So let's get right to the heart of the matter. Before we can even start talking about saving money, we have to understand the biggest single hurdle that every single freelancer faces. And it all starts with just one number. And that number is 15.3%. This is the self-employment tax. See, in a traditional 9-to-5, your employer pays half of this for you. But when you're a freelancer, guess what? You're on the hook for the whole thing. And the crucial part is this is on top of your regular income tax, and it kicks in once your net earnings pass just $400. Yeah. Okay, let's get into our first major hack. Now, this one isn't about some fancy secret deduction. It's about building a penalty-proof rhythm that keeps you on the IRS's good side and saves you from those nasty end-of-year surprises. Here is the rule, plain and simple. If you think you're going to owe more than $1,000 in taxes for the year, you absolutely cannot wait until April to pay it all. The IRS requires you to pay in chunks throughout the year. And if you don't, you're looking at a 4 to 5% penalty. It's literally throwing money away for no reason. So get these dates in your calendar right now. I'm serious. These are the 4 key deadlines for your 2025 estimated taxes. April 15th, June 16th, September 15th, and then January 15th of 2026 for that final quarter. Just meeting these deadlines is your first big win. Now for one of the most powerful, but also one of the most misunderstood deductions for pretty much the entire remote workforce. Let's talk about how you can turn a piece of your home into a really significant tax saving. But, and this is a huge but, before you start measuring your dining room table, you have to know the golden rule. The IRS is super strict here, regularly and exclusively. That means the space is dedicated only to your business. And with audits for this exact deduction up 20%, you have to take this seriously. No mixing your workspace with the kids' play area, all right? You basically have 2 ways you can claim this. The simplified method is, well, simple. It's $5 per square foot, capped at $1,500. No receipts, no fuss. The actual method, on the other hand, involves a lot more tracking, rent, utilities, insurance, but it often gets you a much bigger deduction. So, for example, a consultant with a 200 square foot office would get a $1,000 deduction with the simple method. But if their actual prorated expenses are higher, tracking them is definitely the smarter move. Okay, beyond the home office, there is a whole world of deductions out there that so many freelancers just completely overlook. Think of these as the hidden gems that can dramatically, and I mean dramatically, slash your taxable income. Just look at the variety here. Let's focus on a few of the real heavy hitters. That qualified business income, or QBI deduction, it's a total game changer, potentially letting you deduct 20% of your business profit right off the top. You can also write off 100% of your health insurance premiums, and for 2025, that standard vehicle rate is a really generous 70 cents per mile. Each one is a powerful tool on its own, but they become even more powerful when you start stacking them. Now, let's see how this all comes together. This is where the magic happens. Take a look at this scenario for a graphic designer who's making $75,000 a year. By combining a pretty modest home office deduction, mileage for client meetings, that powerful QBI deduction, and a solid retirement contribution, they've deducted nearly $30,000 from their income. And the result? Over $7,000 in real tax savings. That is how you blow way past our $2,000 goal. Okay, so we've covered the what and the why. Now let's focus on the how. It is time to turn all of this amazing information into an immediate, concrete plan of action that you can start today. And here it is, your 4-step plan. Number 1, start tracking everything right now. Don't wait. Number 2, get that final quarterly payment for 2025 in by January 15th. 3, talk to a professional. A CPA can help you figure out the really complex stuff, like that QBI deduction. And finally, 4, file a smart, complete tax return by the April deadline. It is that straightforward. Look, the strategies are all here, the savings are very real, and the potential is just sitting there in your business expenses right now. You have the hacks. So the only question left is, how much are you going to save?